The truth about Wall Street bets, it seems like we have developed a tradition where every year starts with a financial disaster. 2020 started with the massive stocks market crash. 2021 with the retail investors pushing huge funds to lose billions of the dollars and putting the entire financial systems upside down. I'm just curious what 2022 is holding for us. The Fed is going to announce that it's going to launch its own cryptocurrency. I wouldn't be surprised. GameSpot's stock price surrounded more than 1,700% instantly, driven by the group of the amateur investors on the Reddit who organized to revolt against the huge funds that bet against the company. The best part is that these huge funds that seems to like no one can beat them at their game was billions of dollars. A bunch of the Reddit users destroyed multi-billion dollars hedge funds that spent millions on the latest software's best accountants and analytics to predict the market. They even caught the eye on the White House in the process. Melvin Capital on the hedge funds that shorted GameSpot was 53%. It started the year with $12.5 billion and ended January just with $8 billion. It's estimated that the short seemed lost nearly $13 billion on the GameSpot alone. So far this year, I guess these hedge funds will think twice before the shorting and other stocks. However, most retail investors who purchased the stocks at $300 or $400 or above ended up losing most of their money since platforms like Robinhood restricted trading. To understand what really happened with the GameSpot, we have to understand why the hedge funds shorted the GameSpot in the first place. How is it possible a short more stocks than the number of the stocks that exist? Should you trust Wall Street bets? And how to avoid the biggest financial mistakes in the most investors make. We will answer all of these questions and many more. But before we do that, here is the little disclaimer. This is not financial advice, and everything that said in this video is for educational purpose in order to make the best financial decisions that suits your own needs. You must conduct your own research and seek the advice of the licensed financial advisor. And now give this video the thumbs up for the YouTube algorithms, and let's get right into it. First, shorting. A tool for the ultra rich. You probably heard about hedge funds, but you didn't know for sure what they do because they are not allowed to market themselves since they are not regulated. That's why very few people know how hedge fund work. Hedge funds are made by the rich for the rich to make the rich people richer and avoid taxes. That's all you have to know. If you have never invested through the hedge funds before, that's alright because you need the net worth of at least a few $100 million, unlike ETFs. They take a percentage of the profit based percentage of the total assets you invest in. That's why they are the maximized profits for their clients. The most common investing strategy you probably heard is to buy low and sell high. That's how you and I invest. But the ultra rich, like the hedge funds, invest by reversing this strategy. They buy high and sell low. That doesn't make sense at first glance, but it's simple. Let's say you expect the certain stocks is declined, like Intel, because you know that Apple, who is their biggest clients, will announce next year that they will no longer buy Intel's chips and make their chips in-house. So you pick up your phone and call your broker. You borrow from him a single Intel stocks that cost $100 and instantly sell it in the open market for the $100. Congrats. Now you have $100 in your pocket, but you still own your broker one Intel stocks. Let's say you are right and the next week's Intel stocks price drops to $70. You use that $100 to buy one Intel stocks for $70 since the price dropped and return it to your broker and pocket the difference. Congrats, you have made $30 out of the fall of the stocks. It sounds simple in theory, but extremely difficult and risky in practice. What happens if you are wrong? What if the price doubles overnight? You still have to return that singles into stocks to your broker. Now you have to buy the stocks back for $200 to return to your broker. When you buy the stocks and try to sell it when it rises, the maximum that you can lose is amount of you invested it, but not in the case of the shorting. If price keeps rising, your losses keep rising. Theoretically, you can make unlimited losses, since theoretically the stock's price can rise indefinitely. So, when hedge funds realized that GameSpot is struggling, they decided to play around with its stocks and bet against it, and shorted 114% of the stocks. Its stocks. What? Wait a second. How can you short more stocks than the number of the stocks that exist? It's complicated, but here is the simplified version. Let's say Elon owns one to games top stocks. His broker lends Elon's one share at short seller. Jeff borrows that stocks and sells it to the open market to Warren. Warren doesn't know what Jeff actually borrowed the stocks, so Warren broker lends his share to another short seller, Bill, who then goes to the sells that share to another investors. The exact same shares now has been shorted twice. This scenario shouldn't be happening, but it happens. So, the Reddit user who was investing in GameSpot since the fall of 2020 realized that all of these hedge funds shorted over 100% of the GameSpot shares, which means if everyone starts buying GameSpot, the stocks will keep rising, and hedge funds will have to buy these shares no matter how expensive they get exist their portions. But that will drive the price higher, which will attract more investors, which will again drive the price higher to the point where these hedge funds will either go bankrupt or at least buy back these shares at unbelievably high prices. So GameSpot stocks prices surged more than 1,700% instantly. Theoretically, it made sense to buy GameSpot because short sellers had to pay in interest on the borrowed stocks. If everyone held their positions and didn't sell, hedge funds would have keep proposing higher and higher prices. GameSpot could have easily crossed the $1,000, but something went wrong. Platforms such as Robinhood and other restricted retail investors from the buying more GameSpot shares. That's insane. Of course, they explained their actions by saying that they were protecting their clients, but I don't personally buy that. That could be the reason partly, but I think there's a lot of them more in this than we know. We know maybe one day we will find out. Trading another form of the gambling. Here's what I don't like about these kinds of invest. First of all, it's not investing, it's trading. And it's not based on any data or the logic that people who invested in the GameSpot and similar companies are not investing because they did not do fundamental analysis and expect businesses to grow. It was pure pump and dump. The problem with that is that no matter how high the stock's price will rise, it will crash and fall back to whatever it started because the company didn't change or grow. At some point, when the price reaches a certain point, every buyers will sell, which will drive the price down, which will force other investors to panic and sell, which will future drives the price down, which will force more investors to panic and sell, and so on until most people who purchased the stocks after the hype will lose at least some of their money, if not all. You could be lucky, you could be one of the early buyers, but chances that you will lose money, especially if you invested once it was already all over the news, are the higher. When something that happens, when everyone is making money, when it's all over the news, it's really difficult to control yourself. The feelings you're missing out will push you to invest even if it's too late. I have had that feeling multiple times, but I try my best to control myself because it will feel like I'm missing out. Chances that I have missed it out, they're already 90%. So even if it's a great opportunity, I would rather miss it that lose the money I have earned with my blood and sweat. I am not saying you shouldn't take the risk or invest investing is great. I do invest myself, but this channel is about investing. But when investing based on the facts and the data, chances you will make money are way higher, and most importantly, you can sleep perfectly at night. If you have enjoyed this video, you will most definitely enjoy this custom playlist that I have created specifically for you that has our most popular videos on the businesses, investing, and the stocks market, and that can potentially change your life. And now give this video the thumbs up it deserves, and make sure to subscribe if you haven't done that yet. Thanks for watching, and until next time.